Okay, just waiting for it to get up on YouTube and then we'll get going. Okay, November is on us already, guys. I can't believe it. Another year. It's amazing that I will get going. Oh, amazing how I started this as a hobby when I retired as a money manager about 8 years ago, and I'm still here, still got the passion, still looking at other developments for software, cool tools that will help traders. So yes, I'm still here and still here for the foreseeable future. However, I need help. So next year, I am going to be running an apprenticeship scheme. I'm going to look to recruit no more than 23 apprentices for 2023. The cost is $2,300, but you get access to $26,000 worth of software and $6,000 worth of strategy builders stroke auto traders. And then you will learn everything from me for the whole year. You will learn everything I know. And we will be doing it through an LMS system, like 360 learning. So there'll be lots of collaboration. You'll be making videos as homework. I'll be sending you charts, and you're going to have to frame the charts and talk over them and blah 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 blah. There's like a group chat in there as well. So it's all going to be done properly, and you will be able to go back, look at all the PowerPoints, the pre-recorded videos, the live sessions that we do, all that sort of thing. We're going to look at all of the indicators one by one. So we're going to be looking at all of the XBrat algo, all of the XBrat indicators, from Elliott wave to roller coaster to bits, range breakout, all of them, including the manager. And we're going to be starting to build real strong, successful traders. And during that year, I will choose 2 to 3 people to come and work for me full time with a base salary, and to take over doing webinars. So there'll be more webinars, just in the monthly webinars. They will be responsible for making videos on a daily basis using the software, and basically become part of my team. But the only way you can become part of my team is through the apprenticeship, because I need mini-me's. I need people to think like me. I need people to understand the different strategies, different market conditions that these indicators work, and basically be mini-me's, not try and reinvent the wheel. So you'll have access to all of the indicators on 2 platforms. I need traders to have like a Trading View and a NinjaTrader, or a Trading View and a thinkorswim, or a TradeStation and a NinjaTrader. So you will have all of the indicators, and you will have access to the auto traders stroke strategy builders. At the end of that year, if you're not successful, guess what? You get to keep all the indicators except for the auto traders. Okay, so that is a great deal. If you want to get involved, I'm going to put my email address in the chat so you can email me directly. Okay. This is in theory, it's $32,000 worth of software all of next year, and you will learn how to use it, because it's my strategies turn into software. So this is very, very powerful. So I'm going to put that there in the YouTube as well. We are onboarding people already. Okay, we've already onboarded 3 or 4 already. They wanted to join early so they can get access to the software, and they can start just getting used to it and asking a few questions. And I will be doing 2 live sessions between the 15th of December and Christmas to get people going. So that's the apprenticeship scheme. Again, it's not just going to be ad hoc. It's a whole year learning an indicator each month. there's going to be a new indicator. There's going to be new indicators coming out next year as well. You'll be learning about those strategies, whether it's the VWAP or whether it's the auto support resistance zones, the pullback zinger or whatever it's going to be called. Lots of development going on, and it will be a collaboration thing. So there'll be a portal where all of the live sessions are recorded and they will be kept. All of the PowerPoints will be there, all the homework and everything like that. It is good. It's part-time, but there will be homework. You'll be making videos and everything like that. So if anybody's interested, please get in touch. So I made a video earlier today setting this gold trade up. Okay. And it's just made $400. So I'm going to put the link in to the chat for the original video, and you can watch it at your leisure. But basically, I was discussing today that market conditions aren't always conducive to one particular strategy. So if you have a strategy and that's all you're trading, some days you will not trade it. Okay, so this is the trading view version. This is the gold. Okay, so this is the range breakout. So the range breakout defines an opening range, and it's green. So we're only looking for the long breakout, but it reverses and it comes down. There's no trade there today, but we can see it coming down. Where can I trade? Where, is there an opportunity? Yes. With the XBrat algo, it's a different strategy. It's for different types of market conditions. We get the 5 and the 6 star sell. We push down, we move down, the manager just turns green here. I've got a trading stop at 50 ticks. That's a $500 trade today. Okay. Now, if you're on the 15-minute, on the roller coaster this time, you're actually still in the trade. This is a more intraday turning into potential swing territory. So, even though you may have started off with an entry much higher than the roller coaster at 1654.9 on the 5-6 star XBrat algo, you may think, do you know what? I think gold's going to continue to go down. What's the roller coaster doing on the 15-minute? And that's what it's doing right now. It's actually printing a trailing stop at 52.60. Okay, so the higher time frame you go up, obviously there's going to be more risk. But if you're doing a multiple time frame strategy where one strategy doesn't work, but I've got in on the 5-minute on the XBrat algo short, roller coaster printed here on the 15-minute, and actually this looks pretty good. Still quite a lot of red on the bias depth heat map here. Maybe if you weren't in a rush and didn't want to take the $500 and actually want to give this chance to work, the 15-minute time frame on the roller coaster could be a fantastic opportunity to continue trading that trade for longer today, if not swing it over tomorrow. Does that make sense? Let me know in the chat. Because if you've got one strategy and you stick to that one strategy, you are not going to trade every day, because you can't get continual trading opportunities because the market conditions will vary, will change. Okay. So let me know in the chat. There's some new names in there. So if you do get in their chat there, let me know if that makes sense. Click everyone, click on the chat, and just let me know where you're from as well when you answer. So I know George is from the US. I know Randy's from the US as well. So, Mike, this trade was taken at 10 a.m. this morning EST, Vic, US, Pennsylvania. And this is on the 5-minute time frame, the top one. Okay. So it was around about half an hour after the US markets opened. Chico, Costa Rica. Never been, but I've seen lots of videos, and so I do travel quite a bit when there's no COVID. So Mike, yeah, it's on the 5-minute time frame. So this trade was in around about 3 hours. Okay. But if you're on the 15-minute time frame and you're using this now to manage it with a roller coaster, you're still in. Yeah. Yeah, it's futures. Yeah. Similar can be done with forex. Mike, are you a futures or a forex trader? I know you're new to trading, but you know, where have you started your trading education? Have you been sold the forex dream, or are you looking at futures trading? Futures is easier, to be honest. A lot easier to trade, and there's micro futures as well. Okay, so that's gold today. I just want to go to oil a second. On the 5-minute. Okay. Yes, so yeah, futures market's easier to understand, and with futures you can trade currencies as well, Mike, and we'll look at those differences in a minute actually with there. And Mike, it might be worth you coming on my apprenticeship scheme for next year for $2,300. That's amazing. You know, it's $26,000 worth of software, and you will learn. Okay, you will learn everything. I know. It'll take a year, it's part-time, but with trading, you cannot run before you work. Okay, Vic, yes, futures to me at the moment, because stocks aren't really doing that great. There's more opportunities in the futures market. So with the range breakout here with oil today, we've had 2 trading opportunities, really. So it's not clear cut, but we had a breakout to the downside here on the oil pit open. Okay. And that moved around about 450 ticks. Yeah. It's $2,300 for the whole year. You get access to around $32,000 worth of trading software. And more importantly, you get to learn how to use each trading indicator and each strategy. Okay. And I will tell you now, guys, so I have actually got a young 19-year-old guy, never traded before. He's a friend's son, and he's coming on the apprenticeship program as well. Okay. Because he wants to learn. And, you know, I actually quite like a bright mind that's not got a great deal of experience, so I can mold him a little bit. But again, if you've got some experience but want to learn all of these different strategies and are open to becoming a mini XBrat, then it may be the route for you. So oil, $50, a $500 move today down. Now, when you are trading the range breakout, okay, it defines the range, it gives it a bias of red. You're only going to trade down, okay? But when the manager is mixed from red to green, or actually when the range is defined and it's red, but the manager is green, you're only going to do a target-based type thing. George, we're using it on 10-minute recently just to see if there's a bit better, a bit more consistent win rate. And to be honest, there's not a great deal. If I put oil on the 5-minute now, it's the same sort of thing. Okay, it turns red, you go down, it goes short, it comes back up, and this is what we're talking about now, is the continuation trade is the big trade. Okay, let's go back to 10 minutes second. All right, let's go to 5 minute, George, because you're used to that. So we've taken the 50 ticks. Now, when we're coming back through the range here, we see the ribbon for the manager is green, okay? Also, the bias depth heat map, all 6 timeframes that are higher are green, okay? So in this case, we don't do a target strategy. We do what's called a confirmation strategy, and we're only just getting out now as the manager ribbon is turning red, okay? So again, you've got to use the manager on every single strategy because it manages the trade, it tells you the behavior. But in this case, it helps you decide on the strategy you're going to use to manage the trade from the outset. So with the oil down move here, because we are mixed, we don't trade the confirmation strategy, we just set a target. So when it goes through 20 ticks, we put it to risk free, okay? When it goes through to 30 ticks, we put at 15 ticks. And then we've got a target of 40 or 50 ticks. Don't want to be greedy. Now, when it comes back through and the manager ribbon's already green, we use what's called a confirmation trade management strategy. As long as that ribbon remains green, even on this pullback here, we stay in the trade. When it turns red, which it's just done now, we get out of the trade. That's simple. So in this case, $500 first thing in the morning, and it's just changed now. That was here, $119. So 119 ticks, sorry, that's $1,190. So that's a $1,600 day on oil range breakout, okay? Some simple rules, but again, it's very, very important to understand the differences of those sort of trade management strategies using the manager. If it's mixed and you haven't got the right biases and you've got no confirmation with the bias depth heat map, just go targets. 20, 30, 40, 50 ticks. Don't go any more. Don't be greedy. If you've got the confirmation from the bias depth heat map, all green, all 6 timeframes, the ribbon from the manager is also green, you revert to just what we call a confirmation strategy, and you just wait until that turns red and takes that profit out. Very, very powerful. That's just oil today. Okay, so let's go now. I want to go and look at 6E, which is the euro futures. Okay, now it's a little, it's easier to trade. If I look at that chart now, and then I'll put euro US dollar on. Okay, pretty much the same. But futures allow you to trade 6E or micro 6E, and it's a lot easier. Every single ticket moves, you win a certain amount of money, and it's a lot easier to trade. Now with 6E, the euro, that moves in the opposite direction as the dollar. Okay. Now, one of the things I'm going to teach on my apprenticeship is about correlations. It's very important to understand, even if you're not in the USA and you're a conservative British guy like me living in the south of Spain, everything revolves around that US dollar. Whether you like it or not, everything revolves around the US dollar. So when those US indexes open and they go one way, the US dollar either goes the opposite way or goes with them. And when the US dollar goes one way, the oil goes the same way. But when gold goes one way, the whatever. And then there's correlations from also to gold and then 6E. So there are ways to actually put those on your chart. So if you wanted, for example, on TradingView to put how those particular things are moving, for example. So if I go onto this chart here, I can actually add, and I'm not going to go into it in too depth now, but we know that 6E, we can put a trace on there for gold, for example, to see how that is going. Or we could put the US dollar on there, and so on and so forth. So if I want to add something here, I can put DXY for the US dollar. I think it's going to be in all DXY US dollar here. Okay. So that's my US dollar trace. Okay. I'm not going to go into this in too depth, but you can see US dollar goes one way, euro goes the other. Okay. It's a pretty cool tool on TradingView. It's, to be honest, if you understand where those correlations are, you don't necessarily need it. They are a good confirmation that everything is working the right way. So one of the things that I'll be teaching next year is when things are behaving properly, what the correlations should be. When things aren't, and when they're not like that, things aren't behaving correctly. So you should be either not trading, going to the beach, spending the day by the pool, or being very, very risk averse. Okay. If things aren't in the groove, if you know some of these correlations aren't quite working right, there's something in the markets that's not right. There's a bad feeling. There's either massive sector rotation and Nasdaq's climbing up and RTY's going down and the Dow's flat, and you know there's things like that that will affect the US dollar and those other correlations. So just be aware of those correlations. Now, with 6E, this is very tradable with certain opens. So I'm going to put some more on there with the range breakout. We're going to have, where are opening ranges? So I am going to put Europe on there. And I'm also going to put New York Gold on there. Okay, now, so instruments will go through phases where they can come back through, or you know, you can get those continuation trades, or in some instances, those opening ranges can act as support and resistance. Okay, so they're very, very powerful. Yes, George, the bias depth heat map is your go, no go gauge. If you don't get confirmation, you don't trade. And a lot of day traders will find reasons to get in a trade. My whole, for the last 20 years, is trying to find reasons not to get in a trade. And if the stars aren't aligned, I just don't trade. Okay, so the heat map is a phenomenal tool. It was a great, it took a while to get to work properly, but now we can set it for scalping, day trading, swing trading, and we have, it's your, you know, signal comes from the range breakout or the XBrat algo or what, you know, whatever it is. Confirmation is the heat map, simple entry strategies that I teach. And then trade management with the manager. You know, you've got the full cycle to go through, and that's what you should go through every single time. So with 6E today, lots of trading opportunities. You know, Europe, we had the opening range here. It was colored in red. We go short. There was a nice little trade there, but look at the manager here. Look at the manager. Let's put the bias depth heat map on as well. Heat map, heat map, heat map. Where is it? There it is. Okay. What time frame? We're on 10 minutes, so we'll want to be on day trading. Okay. So here we're all 6 time frames in the red, but the manager ribbon is green. So we're only going to go target. Yeah, it's a target. So in reality, it doesn't trade like oil. There's 22 ticks there. A 20 tick move on 6E is very good. You know, your target should be when it goes through 10 ticks, make it risk free. When it goes through 15 ticks, lock in 7 ticks profit. When it gets to 20 ticks, take out. That's 6E. See how it comes back through. Nice 20 tick move again. Comes back, finds support at the opening range. That happens a lot. Okay, guys. Not only that, we get this candle here. Now, I'm not giving anyone any prizes today, but can anybody tell me what that candle is there? Okay. This candle here, this red candle with a big wick. What's it called? Hammer. Correct. But with the manager, I know that is a high volume rejection of the lows. Okay. So we get a candle open here. Okay. It comes all the way down and rejects those lows so much it almost closes back at the open. But the candle is colored red. So that's what's called a distribution candle, because this candle before it is a down candle, but it's cyan. So it has more volume than that one. High volume rejection at a support and resistance zone. Why am I calling it the support and resistance zone? Because that's the opening range from the European Open. Okay. We come back down again to test the opening range. We now get a 2 candle pattern. These two here. What's that called? And don't say Paul Bradby. Come on, tell me, what's it called? It's a, not quite, pregnant lady, bullish army, okay? But some interesting facts about bullish armies. You get a very big candle down here. Higher volume than the previous candle. Also, higher than average volume. Yeah. And it's a big, almost solid candle. Then the next candle gaps up slightly and then closes near the high. It's like a pregnant lady or me, fat belly. Yeah. So, but it has less volume than the previous candle. So what happens is it's almost like going down to the bottom of the hill on a roller coaster, free rolling, and it jumps, comes back up again, just runs out of juice a little bit on the next roll. So that is a bullish 2 candle pattern, a bullish harami. We then continue up again. We come back down and test that bloody zone again. Look, this time a red candle, it rejects by 50% rejection here on this candle. There's the low of the wick. That's where it closes, higher than average volume. Big rejection. Yeah. Then we get the New York gold pit open. Okay. Remember, gold is intrinsically linked to the euro and the US dollar. So when we get the New York gold pit open, we get the range defined here. It's colored in green. So we're only going to go long. We go long. Okay. We then coming back into the New York Stock Exchange open now. First 10 minutes were colored in red. That's the range. We go short, and we're actually still in this short right now. The manager's telling us to stay in because the ribbon is red, sorry. Okay. So that is simple behavior, understanding the behavior from the manager, the volume, the high volume rejections, those bullish sort of chart patterns, candlestick patterns, trading that 6E is pretty similar than the euro to the euro US dollar, but then trading through those ranges, trading the breakout, the continuation. We don't trade these, but we understand that this is forming a really strong support zone. But then when we get the New York Stock Exchange open, obviously the US dollar climbed a great deal, which sent the euro crashing down. Okay. Not only did it crash down, it broke this pretty quickly, this European low, and just came down. Look how it pulled back up here. The manager tells you not to panic. This pull back up here, look, we get a higher than average volume candle, but it's gray. Then it's gray again. So that's even less volume. Then it's even less volume, lower than average. Then we get a move up and it rejects the high with higher volume than the previous candle. Anybody tell me what the name of this candle is? Begins with spinning and ends in top. Okay. It's a high volume rejection of the highs. Okay. Because we've got higher volume than the previous candle. Yeah. Understanding their behavior is very, very important to maximize those profits continually when you are trading. Any questions on the range breakout, guys? I thought I'd go through this quite a bit today. We've done two examples, one with gold, where there was no trade, okay? But we then switched to the XBrat algo because that gave us a trade because it's different. It's a different strategy, yeah, different type of market conditions, yeah, okay. So one of the things I always have on are the 4 indexes, okay? Now, very, very important. I did post in the Discord group the other day that I use them as a barometer. So if they're all going in the same direction, I'm happy. Yeah, the markets are behaving properly. If they're not, I have to be careful. Look at NASDAQ here. Nice, gentle move down. ES, reasonably gentle move down. The same with the Russell. The Dow Jones ain't performing very well at all. We could say at this point there's a bit of sector rotation, but if there was, that would have continued to go up and these would have continued to go down. So with this coming down to test those lows of that breakout and then bouncing back up again, but the others not really reacting as much and continuing to go down, there's a slight bit of sector rotation, but there's something telling me just to be very careful when I'm trading those indexes today. To be honest, the gold and the 6E was the better trade today, in my opinion. Also the oil, okay? So we've done oil, gold. There's no, everybody that starts trading futures seems to think they've got to trade NASDAQ, okay? I never trade NASDAQ. I can make more money trading oil, gold, 6E than I ever could trading NASDAQ, because every time you get a good trade on NASDAQ, you give some away. It moves too fast, it's too volatile, and it's just not worth trading, okay? Yeah, I hate NASDAQ as well. It's not tradable. If I'm going to trade any index, it will be RTY in effect. I mean, I like the Dow as well. RTY is a great, it's smoother because it has a lot more stocks in it. 2,500 or whatever it is stocks compared to the NASDAQ or the S&P. So the Russell is a great index future to trade, in my opinion. So we've gone through quite a lot of those. I just want to go through stocks a little bit. So what I wanted to do, I wanted to show you day trading stocks. Is Visa a great example? Maybe, maybe not. Let me just go to, yeah. Okay. You'll have to excuse, the time is the European time on the bottom here, so not really a fantastic type of opportunity there to show you. So roller coaster. Let me change the time, because that's very confusing to me as well. You guys haven't changed your clocks in the US yet, have you? This weekend, is it? Okay. Right. So I want to go through here. Let me just put session breaks on there as well, so you can see them. Okay. Right. So one of the things that is fantastic for day trading stocks. So this is Visa. I mean, I'm long-term in Visa, years and years and years. But and if you ever want a long-term investment, always invest in debt. Okay, Visa and MasterCard will never go out of business because everybody keeps using credit cards, and the population of the world is growing and they keep using Visa and MasterCard. Okay, so longer term bet, get 1,000 or 10,000 or whatever in Visa and just leave it for 10, 20 years and you'll make money. Okay, simple as that. Anyway, day trading Visa. So we are on Wednesday today. So let's look at the last 2 days. Yeah. That's Tuesday and this is Wednesday. Now, what we're looking for with a roller coaster is what we call a stochastic MACD cross. Now, there's a few more points of control in there to make it a viable trading strategy. So the idea of all the indicators and the software that I have had produced is strategies that I've used that are quite complex and they're difficult to trade manually. I did them for years, and you've got to do all these fib lines and do this and look at the stochastic and recognize this pattern, and it becomes really difficult. So there was a bit of a selfish reason why I had these indicators developed in the first place, was to make things easier for me. Okay. But also then, obviously, it makes things easier for retail traders. So you don't have to you learn the stochastic MACD cross strategy. You don't have to learn those extra points of control to make sure you've got a good entry and where your trading stop's going to be. The software just prints it on the chart for you, and you need to follow it and just make your risk decisions there. So with the roller coaster, this is Visa on the daily time frame. Oh, we get an open on Tuesday. This is from the previous day. Obviously, we'd get out just before the close there, a break even, will not carry it over. So then we get a downward signal here. We get a little red arrow just there, and we get an entry price. Now, an entry price is a start line. As soon as you print a signal, you don't press sell, okay? It's a start line. It has to get over the start line for you to go in. So you use a stop limit order or a stop market order, 1 cent or 2 cents or whatever, 5 cents below that start line. So when it takes it in, you're in. Get a little bit of a pullback, and then it starts to go down. Then it starts to print the trailing stop. This is where you would adjust your trailing stop. And at this point, when it breaks it, you get out. Then the roller coaster gets to the bottom of the ride and it starts to go back up again. We get a signal on this candle here, but it actually doesn't cross the start line until this point. We go through, and just before the close, we get out when it takes a trading stop out. 2 trades, 1 long, 1 short. Simple. Today, we got the open. The first candle gave us a signal. We didn't go in until 3-4 candles later. And then we just got out recently when the trading stop was taken out. And now we've had a long signal and we're in the long. Simple. Any questions about that? It would take me hours to explain and teach the stochastic MACD cross strategy. That makes it simple. No, George, you don't have to trade both. I just trade RTY. But in reality, all I have I have those 4 indexes on a chart as my barometer. If they're all not behaving in the same direction, I just don't trade indexes. It's as simple as that. Okay. The Dow is cheaper to trade than ES, so there might be a good reason to change the Dow. Because it's the loss, it's what you could lose. So with the Dow, it's $5 a tick. With ES, it's $12.50 a tick. And if it goes against you, you lose more money on ES. Simple as that. Okay, just whatever your risk is, really. So any questions on the roller coaster? I wanted to give you an example on stocks rather than futures, but it's very, very simple strategy to use. And fantastic for day trading stocks if you can afford to day trade stocks. So I know there's day trading rules in the US where you need 20 or 25,000 to day trade stocks. And I know you can trade options with this, but with a roller coaster on a 5-minute time frame, you could get 2 trades a day, and 1 long, 1 short. So trading options would be quite difficult with that. So you'd need a capital to trade that. Or if you was in Europe or elsewhere and could trade CFDs, a margin product, a lot easier. It's a bit, CFDs, contracts for difference, trading stocks, is like futures trading. You're betting a certain amount of contracts, it's going to go down. And every time it moves 1 cent, you win a certain amount of money, depending on how many contracts you do. So CFDs outside of the USA, so in Asia, Europe, that sort of thing, UK, CFDs are a really great product to day trade stocks with. Anybody trade crypto by any chance? Any crypto traders in here? Okay, so you day trade those? Let's go to ETH, crypto. Oh, wow. Okay. So this, I've just gone in ETH. So I want to show you, this is a good example of harmonics really being hot snot, okay? So whether you're trading crypto or anything else, this is phenomenal. So what I've got on here is, let me just take the XBrat algo off a second. So I've got the auto harmonics trading indicator, 2-day swings. Okay, I mean, to be honest, this isn't bad, but this is day trading, but I will revert to a different one. But what we have here is a bat pattern complete in the automated completion zone, okay? And it's colored in red. You go short. There's the short. Then we then come back and a bat pattern forms right on the edge of the completion zone. The long is okay. It's not fantastic. Then we get another bat pattern form at the bottom of its completion zone and the long works. Phenomenal. So if you're doing 2-day swings, you're probably on a 30-minute time frame. Is that correct, Chico? Or 15 maybe. There's not been a great deal of moves actually on ETH. Probably BTC, isn't it better, or is it quite subdued at the moment? Yeah, I'd say 12 was probably better, but we'll see. Yeah, it's been very boring. Yeah, 15, 30. I would look at 12-minute as well. We get some great signals with the XBrat algo, but again, if you've got a really flat market, so here's a top tip: go to the hourly on crypto, just zoom out a little bit. Okay, now I'm just going to put in some support and resistance zones in here. Oops, that didn't draw. Try that one again. Right. This is the hourly, yeah. We have what we would say from about the last month, we've got 2 real ranges, this range and this range. If we measure between those ranges, because that's what's tradable, okay? Oh, this is Bitcoin, yeah. 4% between those ranges, yeah, between that range and that range. This is not tradable right now for swing trading, yeah. 4% again, yeah. So this is not tradable for swing trading because we're stuck in a range. What you need, if you now go down to that 15-minute time frame that you're trading on, there are signals, but you will only take signals from one of these either short or longs from this range. So going back, you know, there's a 4-star buy there, 6-star buy there. You know, nothing really is singing out to me. Now, if I go down to the 5-minute time frame, where we get the touches to the range, we could, again, it's still flat. It's not tradable. Absolutely not tradable at all. Okay. No, nothing. No, because it's flat. I'm telling you, for the last month, 4% between those ranges is not tradable. Okay. Let's have a look at, oh, I haven't got NinjaTrader open. I don't know whether BIT is on here. Is BIT on there, the futures? Nano Bitcoin futures. There we go. Okay. Yeah, even Nano Bitcoin futures, no trading. Yeah. I mean, crypto at the moment is so flat, it's unbelievable. Solano had a recent a decent move up recently, but now it's retraced again. A little bit more movement there. Again, I've gone to the hourly just to give me a little bit of an idea of what's going off. I think that's the sticking point there. So I'm taking in this pivot here, this pivot here, and these pivots here for a really sort of strong support and resistance zone. And then up here, we have these, I think, there. This was a great move here. This was a great move. 6-star sell there. It looks, I mean, you may have to start to look wider afield at some of the other more tradable coins. I know Solana, I mean, I'm long-term Solana, but it could be worth switching to that to see if you can do some even 2-day swings is tough. It runs out of juice. I think until the US markets, everything starts to go in the same direction, starts going bullish again, I don't think crypto's really going to gather any momentum. I don't think it's, there's not a lot of trading opportunities right now. Sorry to say. For me, I'm a holder. I just buy and hold. So we had a look at crypto. Not worth doing anything there at the moment. We've done futures. We've done. Let's have a look at ZN. See how that's performing. Not a great deal today. So even bonds are flat today. Let me just go back on here a second. Let's have a look for something weird and wonderful. That's right, George. Yes, yeah. London opening ranges can be pretty good. Currencies. There we go. Let's go to 6J a second. What's that doing? Pretty scrappy. Swiss franc. Ooh, wow. Okay. Yeah, I thought there was. So a great 6-star sell signal there. Now, people will complain that why didn't you get a signal earlier on in the move? because there are 12 points of control for a 6-star signal, whether it's by a long or short. Now, to get 12 points of control is very difficult. But when you do, it's like a 6-star hotel. It takes a bit of time to be able to get or afford a 6-star hotel. But when you're in, it's fantastic. Okay. And these are what 6-star buys and sells for are like. So let me just take off a harmonics a second. Okay. So this is a prime example of, let's just look at the last two trades. We get a 6-star buy signal here. Okay. The bias depth heat map, all green. We go long. Okay. This is on the 3-minute. I've got the manager. I need to be on day trading moderate, really. Okay. So 6-star buy. There's your signal, confirmation of the bias depth heat map. There we go. All the way. Just turns red there. Okay. You can get out there. 6-star sell. Signal, confirmation, all 6 time frames red. We go short. Manager just turns green. You get out there. Very, very simple moves. Yeah. There's nothing difficult about using these trading indicators that we have. All of those 12 points of control are worked out behind the scenes with an algorithm. Okay. You don't need to worry about it. The same with the roller coaster, the same with the harmonics, the same with the Elliott wave. There's not a great deal of Elliott wave setups right now because we're not trending. Yeah. We need to trend and then pull back against a trend for an Elliott wave trade. Now that can be done on, let me just put Elliott wave on here, on a smaller time frame so you can day trade with them. So let's put Elliott wave on here. We haven't touched Elliott wave today. Oscillator, indicator, and the pulse breakout stochastic. Okay. Oh, I need the counter as well. Bar number. There we go. Let's just move these down a little bit. Okay, and I'm going to look at isolating at the top there, 21207. So with Elliott wave, you've got to isolate 21207. I think it was. I'll just go over that in a second. So start of this current downward trend is there, is it not? Okay, it doesn't take the brains of a rocket scientist to see that that's an uptrend, that's a downtrend, even though we're on the 3-minute time frame. It's not rocket science. Okay. Now what we have is we've had a 1, a 2, a 3. Now the wave 4 has pulled back into the automated pullback zones. Okay. Now we have to wait. Let's get rid of the manager a second, just to clean the chart up a little bit. So now we have to wait. We have to wait for this to find resistance. If it breaks that red here, the bearish trend is over, guys. Okay. So that's another indicator. Right now, though, we are in the amber zone. If resistance is found here and it starts to turn back down again, there is an 80% probability, because it's in the amber zone, that we're going to hit that 5th wave automated target zone. Okay, we've got a false breakout on the stochastic down here, denoting a really strong bearish trend. Now we've pulled back against that bearish trend in the overbought zone. It's like an elastic band. If it finds resistance in here, this will turn back down and want to get back to this oversold zone where we get the false breakouts. And what I mean by false breakouts is it tries to come back out, it comes back in again, tries to come back out, comes back in again. False breakout, strong bearish trend. Now we've pulled back. This is the critical time right now for this move on the 3-minute time frame. We have the Elliott wave oscillator, probably just about broken the rules there. So let's measure that. We have retracement. Yes, just broken the rules there. So we could still trade this if there's a decent risk reward. But what I'm trying to show you is don't get hooked up on Elliott wave being just for swing trading. okay, you can use it for day trading, because we've had a move through the US session on the Swiss franc down. We've now pulled back against there mid-session. Freaky that. Okay, happens a lot. Now, if this finds resistance and we start to move back down, we can put an entry strategy together. I'm not saying it's going to happen. Okay, we then use this red 6-4 moving average high for our entry. Okay, we've had a double bottom form here. I know that's slightly higher, but that's within 3%. So this wave 3. So I can't use a regression trend channel for, and again, I'm not going to teach all of this. It's going to be in my apprenticeship program, but we're not going to use a regression trend channel now. We're going to use a 6-4 moving average low for an entry if it comes back down. So if this resistance holds, we start to move back down, this will be our entry. So let's do a scenario. Okay, we don't know whether that's going to do. Say we come down a few more candles and we want an entry here. Okay, turn that to green. This resistance holds and our stop is just above the wave 4. So we have a stop and we have an entry. Now we've got to work out, is there enough risk to reward from here to here? Now, risk to reward is measuring what you're going to risk to what you're going to get to reward. Yes, Colin. So if it spikes up above the red and comes back down and what we call it hangs on to the red and comes back down again, then it's still a good trade, as long as we don't get false breakouts in the stochastic up here, or this actually sort of really just totally obliterates the rule. Okay. So right now, when we're looking at, we use a trend-based fib extension. Okay. So what this does is measure this one whole 100% that you're going to lose, say $1,000, to what you could win down to here. So to use this tool, we click on the stop first. We then click on the entry on the second click. And then the third click, just move it along. And we click again on the entry. So we have a risk to reward. We're risking one whole one to give us a reward of 2 whole ones. Okay. So risk $1,000 here for a $2,000 profit here. That's our risk to reward. For me, when I'm trading the Elliott wave, I need a risk to reward of 1.6 or above. If it's less than that, I will not trade it. That's my last rule. Okay. Right now, this is moving back down. However, the next candle, our entry, let's get rid of that in a second. If this starts to move back down here, our next candle where the 6-4 moving average low is at 0.625. So let's move that down. 0.625. Okay. So if this starts to move down, our entry would be here. If I work out that risk to reward now, that's 1 to 1 or 1 to 1.2. That's no good for me. Okay. What I want is just a nice gentle move away, couple of candles, get an entry further up, but it's got to be below the 6-4 moving average low. Okay, so there's time to wait for that particular trade. So again, it's not just for swing trading. You can use it for day trading because some instruments will trend during a day. They'll pull back against that trend and then they'll go again. But if you can measure that behavior, you can get that return to the trend, that with trend, and you can trade that 5th wave move. Yes, I do, George. Not necessarily if I'm scalping or day trading on the XBrat algo, because there's no target in mind with that because we're using the manager to manage. But if I've got a strong support and resistance zone, so I'm going short on a futures and I've got an entry, I know where my stop's going to be, but I've got a support and resistance zone less than 1 to 1. I won't short into support and I won't go. Okay, simple as that. But those are rules that you've got to have in your mind when you're setting up trades. It's about the potential reward for your risk. So right now, this has come right down. We've tested those lows. Okay, we're not on high Kanashi, are we? Oh, we're on high Kanashi. Okay, doesn't matter. Anyway, this is just an example. We want to be, you know, our risk reward's not good enough on this right now. Just going to change that to normal candles. That's probably going to totally screw things up now. It is there. Okay. So gone to normal candles. Sorry, I was on Heiken-Ashi. So still risk reward, no good right now. If this has an ABC correction with a slightly lower high, then maybe. But again, you got to be strong with this. It's just broken that 6-4 moving average low. Okay. Our risk reward is 1 to 1.5. It's close, guys. It's close. Who would take it? Again, it's rejected those lows. Let's put the manager on. It's got higher than average volume. It's rejected those lows. It's forming a hammer. And it's green. Rejection of those lows on high volume. So it's about understanding the behavior as well. So the manager helps you understand the behavior before you even get in a trade. So what we have right now is if this candle closes where it is, this is a high volume. Whoa, there's some volume coming in here. It's not closed yet. Ah, right, okay. No problem, Vic. Take care. Whoa, there she goes. Wow. Okay, there you go. FOMC. Boom. Okay, guys, that's the hour done. Don't forget, apprenticeship scheme next year. I'm only taking 23 on. We've got people already signed up and moving forward. It's going to be properly structured, live sessions, pre-recorded videos, PowerPoints. It's all going to be in a really sort of cool environment where all the students can chat to each other. You'll be sending me your homework part-time, $2,300. And you get access to $32,000 worth of software. And more importantly, you get to learn how to use it properly. That's for the whole year. And the idea is for me to find 2 or 3 traders that I have trained to come and work for me. Okay. Not as a trader, but as a as part of the team to become experts on the software to help that's now turned into an ABCD. So they will come and work with me to produce these videos, run webinars, and be really sort of hot snot on all of the trading indicators and the strategies. But you know, you can't come and work for me unless you've gone through the apprenticeship, purely because I need to see who has the commitment, who has the ability to learn and trade the strategies like I trade them. You've got to be a mini-me, and that's the only way it will work. Okay, guys, great spending time with you again, and I look forward to December's webinar. Don't forget my email, paul@globaltradingsoftware.com, to get in touch about the apprenticeship scheme. If not, go and check the website out. We've got some great bundle deals for some of the indicators together. Take care, everybody. Speak to you really soon. Cheers, George.